Hi, good evening, everyone. Welcome again. And you guys are joining on Sunday evening. That shows how much of interest you guys have for equity markets. So we'll be in the first session, we discussed few of the ideas discussed at TIA 2020 event. And the ideas discussed were purely for education purposes. The ideas shared by the guest speakers at the TIA event was circulated over social media, so we get a sense or hang of what was shared by the guest on the other day. So we discussed a few ideas on last Sunday, I guess, and the remaining ideas we try to share today. And let me reiterate the ideas shared the other day, or which I would be sharing today along with Ravikant. He'll be joining shortly. Are purely for education purposes. By no means any buy, sell, or hold recommendation. So please take that with a pinch of salt. And again, before making any financial decision, you have to consult your financial advisor for that. On the top of that, those who are yet to listen to that conversation, I'll be pinning that conversation to this spaces. So surely after this spaces over spaces session, you can surely listen to that conversation. And meanwhile, if you have any questions around the conversation which will be going to happen from now, so surely you can send in a speaker request, or you can simply type in the comments, so that we know that what is being asked, and we try to answer that in our capacity. And please, we may or may not hold any names which are discussed, although we try to maintain that we give a disclosure and disclaimer. But again, please ensure you do not act on any names, and our interpretation of what the guest had delivered or presented the other day might differ. So again, by no means of any endorsement or any opposing or any kind of biased views around that. Those ideas were shared in their personal capacities, and we are going to discuss our observation around that. We might interpret that wrong, or we may have a differing opinion. So you should ensure that that has to be kept in mind while listening this conversation. So Ravikant, I sent you speaker request. I hope there isn't any issue around that. So if you got it, so please accept so that we can get it going. And guys, like other people who do spaces, they frequently ask to retweet the spaces, blah 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 blah. We often not do that, but again, at times we request, because the algorithm works that way. So it would be helpful on your part if you can share the link to the spaces over your handle, or maybe with your friends and family, so that they can also listen to the conversation. I mean, that would be a small appreciation on your part, reciprocating the hard work which we try to do, and bringing diverse set of speakers and different ideas, which surely help you guys in your investing journeys. So hi Ravi, am I audible properly?
Yeah, Prince Bhai, you are audible. Am I audible properly?
Yes, Ravi. So, Ravi, before you joined, I was like telling the audience that whatever we would be discussing is in personal capacity. By no means we want to influence any views or any company. And
Hmm.
just in case we have any position, so would be happy to disclose that. And by no means any buy, sell, or hold recommendation or anything. So, Ravi, we can get going. You can, I mean, briefly set the agenda as in what we discussed last time, and then we can start with the remaining names.
Okay. Thanks, Prince Bhai. So, like this is the part two of all the stock ideas which were discussed at TIA 2020. And yes, I mean, obviously, all the participants, all the speakers have put in a very, hard work, a lot of effort to explain all these ideas. But firstly, I would want to point at like what Sham Shekhar sir pointed out in that meet, that at after such a strong bull run, or strong momentum in the market, it actually becomes pretty tough and difficult for any analyst to come up with names which can be seen very safe as well as highly rewarding both. So we must look at things with a pinch of salt, and we must also understand that every idea per se needs its own time horizon to fructify. For example, there may be some idea which is related to, let us say, power or like data center theme. So it might happen so that it fructifies faster than vis-a-vis an idea related to like housing finance and all. But that doesn't mean that one particular idea is better over the other. It is just a difference of like horizons for one is looking at. So with that point in mind, I would like to start with two firms. Both are there in housing finance space. One was discussed by Pawan Parak sir, and the other one was discussed by Vikas Kasturi. So Pawan Parak says discuss PNB housing finance, and again this theme somewhere he has related it to the rising aspirations of aspirational India, and that makan part, roti kapda or makan, that much cherished middle class troika. At least that is what is portrayed in like olden Bollywood movies. So उसमें मकान part पे focus किया है इन्होंने, and he has given like one very key stats which is very important to be kept in mind, that mortgage penetration in India even today, if with after all this effort by different private and public institution and everything, just stands at 11%. And if you couple it with again the original question behind all the names themes which are related to consumption, is that whether you believe in the India story or not. But and if you believe, then you would agree that India's per capita income should go up. And if that happens, we can definitely assume with a very fair safety margin that this penetration level of mortgage in Indian economy should go up. And that presents a case for lenders like PNB Housing Finance, a very strong case to scale up their businesses further. Furthermore, there are a couple of advantages with this particular stock, that its credit rating is very high, as a result of which it can raise funds at much competitive rates. Then at the firm level also, he Pawanji has very aptly pointed that there is a management change, and quite often we have seen that management change in itself is a very key trigger for businesses across the spectrum, be it chemical, be it finance, be it IT. Management change is something which completely changes the work culture, the approach, attitude, aspirations of a particular organizations. So that aspect is also there. And one good part with PNB Housing Finance is that it has a its client portfolio, it has a very heady mix of both salaried as well as non-salaried people, because one of the key problem challenges in India which people face when they go for a housing loan is that quite often that is restricted only for salaried people. And even in salaried, if we go even drill down further, the extent of conservativeness is that high that it is they actually want only government employees in, this is what I have seen in many cases. So that's not the case here. And again further, एक minute. Ha. So, and the current metrics on which, the firm is to be measured, the price to book value and all, they are very much in range. They are not very expensive. So, with this, Pawan Parak sir has pointed out that, this PNB for housing finance will be like a good pick for, consistent compounding going into the future. Further, to add on to that, personally, in my capacity, I have been invested in a firm called Hadco, which is indirectly related to this. And I do strike a chord with Pawan Parak sir and even Vikas Kasturi sir's approach towards housing finance rise. The whole idea is that these sectors will not may not be as fancy and in terms of growth that sharp some other sectors, but then they will have that creeping tendency to grow along with the as the GDP and other aspects like urbanization consumption grows up. So Prince bhai, anything to add on to that?
Yeah, Ravi, sorry, I was on mute. Yeah, you very rightly pointed out that housing affordability is improving, and the PNB housing has been moving. I mean, the prime segment was not working well for them, so they are move towards affordability, and which is working well. And at the sector level, if we speak, the expected or anticipated growth is somewhat 15% CAGR. So that is that might work in its favor. So definitely this is one pocket one can look for, and especially the current CEO, Mr. Girish Koshgi, he is like ex Canfin Home, so you can assume the quality of management also what he had done in Canfin Home, so that these pointers can certainly be kept in mind while studying this particular company. And as rightly you pointed about Hudco, so that is again very well taken.
So, in the same vein, the other idea by Vikas Kasturi sir was of Repco Home Finance. This particular company, I've studied this company earlier. So, at the current juncture, it is more of a turnaround case because of management change. A lot of changes which we are seeing, and a lot of expectation which is built into the valuation, current valuation right now, is basically hinged on the new CEO. Let me check out his name. His name is Mr. Swaminathan. So, that is there because in the past the firm's performance hasn't been that good or great. But that said, past performance is never ever a guarantee of future performance also. So we can as the total addressable market for this particular sector is huge, humongous, and it has a natural correlation with GDP growth and consumption growth, etc. So the overall business looks to be robust. Yes, as we said, there is a KMP, that key management personnel has been changed in the company, and if he's able to carry out his plan and he is able to execute and deliver what he has pushed so far for, it will be definitely a good counter to look out at. So anything you want to add, Prince, on this one?
Yeah, Ravi, and this is amongst one of the cheapest HFC, and you can see like there is no equity dilution since its IPO in 2013, and from last 17 years it has been consistently giving dividends. So that is a fair. I mean, you can surely keep these points in mind. This shows the intent and the how the management is working. And even if you see the ROE, it is also in mid-teens. So and ROA is also 2% plus. So definitely appears to be. It can surely be a re-rating candidate, but again there are certain risk also. So Swaminathan, as you rightly pointed out, so if he moves from here, so definitely that is again. And these pockets of segment execution risk is always there. So we need to be surely. And again when we talk about this, so concentration risk and regulatory risk also be kept in mind. So I think that's a limited point on my part, Ravi, so we can move on to next points. And again guys, if you have any questions around those, so certainly would like to address those.
So further moving on, another idea on Sundaram Finance was presented by Ganeshram Jayaraman sir, and I mean, the moment you go for any name related to Sundaram, Group, I mean, you are assured about the quality of corporate governance standards. You are assured of, like, the overall conservative style of business which they have had. They are, like, in a way, if we can put a comparison, they are very much, like HDFC Bank, which is more than ready to suffer an NIM contraction, but not to go for, like, poor quality business. So this has happened with Sundar Finance also, where other NBFC players of the same segment, for example, like, Shriram and Chola and all, they have gone for, like, they're increasing their asset book very strongly, whereas Sundaram has categorically chosen not to go that way. So this particular business, and again, they are into vehicle finance and vehicle finance. This also again is related to consumption, and again that aspirational India part thing. Hence, it will have a natural tailwind over the long period of time. And given the type of, like, overall corporate governance this particular company has, so it allays lot many like, fears, like, auditor risk, promoter risk, which we have to factor in while we study any other company. The valuation metrics also pointed out by Ganesharam Jayaraman sir point out that, like, the valuations are not that stretched that one needs to be scary of. So it is also, like, like what I would say as a, like, a stock which can be put into consistent compounder category. So you want to add anything, Prince, on this one?
Certainly, and Ravi, it's as you rightly spoke about the management pedigree is gold class, no doubt about it. And in the last 50 years, there is no dilution, and the kind of conservative risk averse the management is. So definitely, this is one of the pockets we should have a look at, and their lending mix has been better. So the product diversification, and they are moving to newer segments like LCV, etc, and even the geographical diversification into north south. So basically the growth avenues are also there. And if you talk about the customer retention, so that is very high, around 70%. So you can assume the discipline they have maintained on the asset quality and capital allocation. So this is something which is working in its favor. And even in momentum or chart, you can say this corporation looks promising. So as of now, I do not have any position in it, but again, we need to be very cautious as the market, because if going forward there is weaker demand in the CV side, or maybe the rural demand also degrows, in that case we have to look for that. But again, compared to its peers, be it Mahindra, Chola, Sundaram, if you compare the financials over a average period of 5 years, so definitely you will find strength in this pocket. So this is again and very beautifully explained by Ganesh Ram Jayaraman sir. He has been tracking this company for over 20 plus years. So he is indeed the best person to tell about it. But again, yeah, this is our limited view around it.
So the next one is, like, a very famous, like, we all know about this particular company because we all have seen at some point or the other this particular company's product. That is Castrol. It was presented by Balaji Vaidyanath sir, and Castrol, like, is a classical case where how, stagnant businesses result into classical PE rating of a company, because the overall margin scope in that particular business is very much limited. Castrol, as we know, they are into lubricants, and, like, obviously a particular vehicle will use a certain amount of like, lubricant only, and as a result of which, like, it went into that zone where the market was completely penetrated. It has been a market leader, but then since the overall involved uses of its product is, like, so small that its margin, it hasn't been able to, maintain any kind of control over its margin. It has been a very price taker type of, like, segment leader. But what interesting has been, changing with this particular company is that, like, and yes, again, one more thing, Castrol also suffered to a certain extent because of onset of EV, as there was this idea that, like, with onset of EVs, ICEs will be completely, abandoned, and, like, there will be no use of lubricating oil and all in EVs. Gradually, that threat has also settled down, and there is now much more clarity about, like, the future of their core business, and they have entered into, agreement with a lot many original equipment manufacturers, like, Tata Motors, MG Motors. And if I'm sure, like, I mean, they have OEM contracts with two more major players. I'm not able to recollect their name with surety. So their core business has also seen some kind of revival. But what is actually giving a very strong tailwind to this business is that with is the data center theme, and Castrol can be a key proxy to play that theme because they are into manufacturing of industrial coolants also. So this was very promptly pointed out by Castrol in its last presentation also, I think. And this also has been pointed out by Balaji Vaidyanath sir. And as a result of which, if we notice, a company which was largely consolidating for good 5, 6, 7 years maybe, has shown a tremendous traction, and like it has more or less doubled within a year. But that said, it has still a long runway if that thing falls in place completely. uh, so ये है Castrol का. Yes, you want to add anything, Prince? And we have Ameya sir also. I think he can also add something onto this one.
Yeah, I'll request Ameya also. I'll make few points. So definitely, and see what's the main trigger they are seeing is like they are finding that if it is moving from low growth to high single digit growth also, in that case it will be a re-rating candidate. And initially ICE was the only growth driver, but since, as Ravi was also mentioning, as highlighted by Balaji Vednath, so it's getting into new segments, and the company is preparing for next leg of growth and getting into the fluids which will be used in EV, and also the data center, the liquid immersion which is required for data centers, and data centers is indeed a big theme. And definitely this is, and they also have an MNC their GOBP, GV, or BP's expertise they can exploit, and the OEM partnership in EV they have with Tata Motors and MG. So also the fuel outlets, which the GOBP fuel outlets with which they have GV. So till they'll be only selling Castrol. So that is again one positive point for them. And the product plus serving, and companies also doing a lot of mechanic training programs for executives. So in that case, like that also help build a good network, because most of the times when we go for servicing and etc. So the is like if it is inside the company, but majority of vehicles we see in India, after a while people, instead of going to the showrooms, they get their vehicles serviced outside. So on that front, definitely this could be a positive if they can manage to have people use more of Castrol products. So that is what limited I have, and the data center aspect I like the most in it, Ravi.
So yeah, very aptly summarized, Prince. So the next, idea was Hamsini by Hamsini Karthik ji, and
Ravi,
haha.
so I think Kamea had joined but dropped again. Let me check with him. Yeah, yeah, Maya is there. So Maya, are we audible to you?
Hello, am I
Yeah,
audible?
hi, Maya.
Hey, hi, Prince. How are you?
I'm good, but Maya, your voice is breaking. Ravi, is it fine for
Can
you?
you hear me?
Prince bhai, it is breaking for me also.
So Amaya, if I am audible to you, can you try dropping once and joining again? Yeah, Maya, you can try speaking now. We can check whether it's fine or not.
Is it better now?
Yeah, yeah, much better.
Hey, Prince, how are you? Yeah,
All
so
good.
see, about the data centers and the immersive cooling, I'm not really very positive about it because, to be very honest with you, it's a technology that the Western countries who are leading the data center race have discarded. Okay, and it's very well known and documented that all these immersive cooling coolants and the PAFS liquids, these are carcinogenics. Companies who use immersive cooling technologies, they go to great length to ensure that the leakage of such coolants or such liquids do not happen anywhere else. So they need further more water facilities to ensure that these coolants are also, protected from getting contaminated into any of the water source. But this is one of the industries where I'm absolutely not bullish about immersive cooling. That is not the future. If you are building any data center up from the tier 3 plus to tier 4, you cannot rely on immersive cooling, as simple as that. There are companies that are developing on-chip cooling through the on-chip jets. Uh, there are technologies that are coming into front. There are multiple sources of cooling systems that are slowly getting developed by the chip designers themselves. So if you're following the trend, Intel is now getting into the cooling systems and solutions because they understand their chip, they understand the power dissipation of the chips that they own manufacture, and even NVIDIA. So whenever NVIDIA engages with the vendors who are designing, let's say, enterprise grade or hyperscaler or HPC computing capabilities for any of their customers, the power dissipation needs and the solutioning is so. To be very honest with you, this is a sunset sector. It's very, seen as something not to go to. I'm not sure if you have seen, those old movies, wherein, a chemical factory basically all these happens at nearby the house, nearby towns and all that. This is precisely what PFAS are. Okay. So to be very honest with you, if your thesis is purely that the immersive cooling and the data center is the next big trigger, I'm sorry, you are looking in the wrong direction. Yeah. So that's my only thought on this space. But I just joined to clear the air around this topic, Prince.
No, no, that would be really helpful, Ameya. So, Ameya, just one quick question before we move on to next company for discussion. So, is this going to stay, or it will be like totally what we say become obsolete in the
No,
sense
it
the
is being
cartoon?
it is being phased out. It is being phased out. So all the data center companies or anybody who is actually putting capacities out there, uh, let's come to the Indian market or the Asian market. See, wherever you have a data center, it's not that you can call it that, okay, I'm a tier 3 data center or I'm a tier 4 data center. You have to comply to lot of norms, lot of regulations, and you have you are actually at tier 3 or tier 4. One of the certifications of of the list of requirements is also the environmental health and safety, EHS, right? So if you are using a traditional coal or let's say a traditional fuel, and in addition to that, if you're using the immersive coolant systems, you will never get tier 4 certificates. Okay. So tier 1, tier to this technology. So as we speak in the Western countries, this technology is being completely phased out. Like I said, probably in a year or two, you will have the chip makers, the server designers, and the configurators themselves coming with the coolant systems and solutions. Yeah. So if anybody has any interest about it, they can read on-chip cooling or a jet spray-based cooling. NVIDIA is also bringing a cooling solutions. There probably it's already in that pilot and it will be available for commercial grade usage within a year or so. So if you see the oil and gas or these companies that they really do not have a leverage and a play here because they cannot go on the on-chip cooling. All they can do is they can innovate, configure, design probably or produce better grade immersive coolants, but they are poisonous, they are carcinogens, and it's very obvious that you will never get a EHS certificate, you will never have EHS compliance. That means you will have challenges selling your data center capacity. Yeah. So if that is a challenge, it's very obvious that the data center operators they will switch to technologies, that helps them to be sustainable, right? So my only gonna play out that way. Probably for a while you will probably see because a lot of data centers in India are between tier one to tier three. You may see a little bit uptick in the business and the sales and all that, but this is not gonna sustain beyond a year or two.
Right, Amir. Thanks. Really helpful. And further, we discuss more companies. So obviously, no buy, sell, or hold recommendation on any name. But if you have any support, I mean, any views around the business, you please feel free to join us. Yeah, Ravi, we can move on to next one.
Very promptly, pointed out by Amya sir, and that's why I said, we have someone who knows this field very in depth. And yeah, that carcinogen part is definitely there with, synthetic lubricants, petroleum based. So yeah, that's something which one needs to keep in mind. So thanks, Amay sir, again. So the next idea is by Hamsini Karthik ji, and as a disclosure, I have a position in this one in the Syn Bank, and the entire thesis behind in the Syn Bank focuses on that lot of mistakes of the past have been cleared in this particular bank. There is a change at the key management personnel level. Also, the CEO of the bank is a new guy, and he's known for running financial institution in a very progressive manner. Then further, IndusInd had acquired a microfinance institution quite some time back, and the baggage of that acquisition has also been sorted out. So in a way, we can say that the balance sheet of the company has been completely cleaned out first. Second, there is a management change. Second, and third, we can see that overall there is a sectoral tailwind for the entire banking sector. But one thing which I would want to add to this one is that even from from where Hamsini Karthik ji is pointing out at this particular idea, it has a fair bit of runway to go ahead. That's not an issue. But as I see things personally, for me, big banks are a separate sector altogether or a subsector within the entire banking space. So, in my opinion, the first four banks by market cap or by even by repute, which came to my mind were HDFC, ICI, Axis, and then fourth one was IndusInd. In fact, I think the tussle for the fourth slot is highest. The first three we all know. And in my opinion, whenever, see, all sectors are cyclical. But whenever the cycle changes for a particular sector, it is never ever the sector leader which will perform the strongest. It has to be the relatively laggard one because its performance is on a relatively smaller base, and and hence it becomes way more visible than others. So that was my added on thesis on industry in bank. And yes, even after this, phenomenal growth, I think it has been a doubler or slightly more than that. The financials of this bank are very comforting, and it has a way bigger runway still ahead of its for growth. So you want to add anything on this one in the same?
Ravi, I do not understand banks well, so I won't be able to add anything to it. But again, I would request you to highlight few of the risk which are there, because as we were seeing that the deposits these days are getting, I mean, skewed in the sense more people are moving towards investing in equities. And on the top of that, I would request like how it had been on the NPA side for the IND Bank, and is there any concentration in one segment or it is well diversified? Would love to hear from you since you are invested.
So see, the one of the benefits of in the Syn Bank is that it is. Hello?
Yeah, go ahead.
So one of the benefits with InduSInd Bank is that, like, they are not into other ancillary segments like broking or like housing finance, which makes them very much focused on whatever they do. That is their core banking part. But at the same time, it becomes a disadvantage also. Okay, that they do not have those channels to leverage their business further. Second, like there is an issue with continuity of senior management level staffs in InduSInd. And as we see that RBI has been very particular with particular in avoiding such kind of practices at big banks and even smaller ones for that matter. So that is definitely one point which we need to look into. And yes, you were very right in pointing out, Prince Bhai, that the MFI, the microfinance institution which they have overtaken, the sector is such that by nature that, anyone sneezes in this world, they will catch a cold. So that risk will be there within the sin.
Right, Ravi. So this is well taken. And so, Ameya, you have any inputs to make on this bank, or shall we move on to next conversation? And Amit and Sudhanshuji will come to you once we are done with the discussing ideas. Then we have a Q&A round after that. Yeah, Ameya.
Yeah, Prince, I don't understand the sector, so I would rather keep quiet, not speak about the some sector that I don't
Fair
understand.
No,
point.
no,
Well,
no,
well.
Prince. Actually, IND Bank, right, is also a Ripple partner, which makes me very bullish. Trust me, just that's the reason I just spoke about. I wanted to actually speak, and I know you people are looking into the banking sector and everything. There are other banks also, which actually I'm very bullish on. Where literally I'm telling you, these banks are working on big things like with the Asian market and with Singapore market. I'm talking about on cross-border transactions and everything. They are actually integrating technologies which will make these banks much more liquid capital will be there. That's what I just wanted to put a point. And if I'm investing in Indus IND Bank, I would bet on it. Thank you.
Thank you. Yeah, Ravikant.
Uh, yeah. So just 1 minute, just somebody is on.
And meanwhile, let me tell our audience once again, guys, please no sort of endorsement on any names, and please do your diligence before acting on any of the names. The idea is simply so as to like discuss on the educational front, and while discussing, there are different aspect which comes to the, which comes to us, so that we also get a perspective that what all think we should look for any particular company in any particular sector. So that is the only intent of such session. Otherwise, no buy, sell, or hold recommendation. And please ensure that you consult your financial advisors before making any kind of buying or selling or any other decision on that. Yeah, Ravi.
Hmm. So the next idea is by Ish Mohit, and that's Godavari Power, Godavari Power and Ispat, I think its full name is. And yeah, I mean, it's a business which has its unique advantages in a very commoditized and a very cyclical sector. First and foremost, they have exposure to power also, which strengthens their business significantly, especially given the fact that power sector will be seeing quite a significant demand pull going into the future. Second, that the company has its own captive mines, and on top of it, its mines are under the older regime, so their royalty is pretty much fixed. And second of all, the quality of the ore which their mines have are one of the most superior ones in India. The iron content in the ore is very high, so that also makes it pretty lucrative. I mean, it's a it's a very well discussed, well discovered idea. And like the only problem which I see in this particular business is that at the end of the day, it is a very high capex. Yes, they have incurred capex in the recent past, and that is going to come live into the very near future. But then, like, given the fact that it's a commodity related business, one needs to be like, very much vigilant of all the various different moving parts in this business. It cannot be categorized as a buy and forget business. Or for that matter, valuations are not that outrightly cheap that they offer extreme, like, margin of safety. So you can add further, Prince.
Yeah, so on the risk side, we can always, keep in mind that oversupply of iron core can cause trouble to this, and even if there is some sort of export ban on ore export, which has happened in the past, and there could be some, although we talked about that they have an old regime. Advantage, but again there could be some changes in the regulation going forward, as their peers who have been allocated the mines on they had paid high premium, which is of the likes of 90% to 120% higher than the previous time. So again, and obviously as you pointed out, these are capex, sorry, and the so at any point in time if debt becomes unsustainable, so that is again a bigger risk. And as you rightly said, valuation is one thing which we all should evaluate from our own study and our lens. So definitely that should kept in mind.
So, like, just to add on to what you just said about the risk part, like, from a personal level, because I've been invested in this company in the past, and like I think like I might be having a small allocation to this one. The thing is that all the goods about this company, good factors, triggers, in a way, to a fair extent, they are factored into the price. At least that is what my interpretation is. So that itself is like, something which one needs to drill down properly, dig deeper, because again, it's a commodity business.
All right, Ravi. So Ravi, I think we can move on to next idea. We can quickly wrap up the ideas and then we can have any questions or maybe uh, further discussion if time allows. And since we are discussing stock in specific, not sure Jiten sir would be like to participate, but after once we discuss the ideas, we'd love to hear from him if we can have a general discussion. Yeah, Ravi, over to you.
So we are like, nearly at the end of the line, because the other businesses which we have, like PVR Inox by Atreya Ramkumar sir, or for that matter, REITs by Mohit Beriwala ji, and or for that matter, LT Foods by Kumar Saurav, and a couple of more. I think there was Shilpa Medicare also and Poly Medicare also. So, to be honest, I do not have that understanding regarding those businesses. So I have, chosen to leave them out. Yeah, I mean, for the wider audience, the PDF of the particular event is there, and they can go through that. So that's pretty much from my side, Prince.
Right, Ravi. So, Ameya, we have got one comment, but again, that is very broader topic. So Mr. Juneja is asking, love to listen about AI from Ameya after this stock discussion is over. Although that's a very big and broad discussion, but if you would like to touch upon a few things, how things are going, and what are the pockets within it which we can think from an investment point of view. If Ameya, are you there? Anyways, meanwhile, if our audience have any questions, so they can send in a speaker request. I think few speakers were there, but they got dropped. And if you have any question, you can also type in the comments also. So Ravi, let me see the comments if there is any questions. Sir, if possible, please discuss impact of free trade agreement being signed between India and countries like UK, UAE, Oman, etc. It may get signed before modal code of conduct is in place? Yeah, I'll come to you, Amit. So, Ravi, on the free trade agreement thing, which has been discussed quite a while, so how you see that if it goes through properly, so what could be the, I mean, which all sectors will be the major beneficiaries, and how you see that panning out, especially if we talk about the textile. So that is one sector which is to my mind. And again, yeah,
So yeah, FTAs are definitely something which gives a fillip to those who are into export businesses. But as has been has been the case in the past, that FTAs need to be implemented properly. Because you see, like there is a lot of hullabore regarding the FTAs related to UK. There are so many companies which have run up based on that expectation alone. But if we see the past experience which India has had at a macroeconomic level with FTAs, like India has FTAs with ASEAN countries, we have suffered significantly to the extent that there was a separate parliamentary committee to study the loopholes in that FTA. So, like how FTA will play out basically depends on two things: that to what extent the FTA agreement is nuanced, so that there is no scope of there is a concept called noodling up, where people businesses specifically go for FTA exempted market shopping, in a way you can say that they will originate their product even if it is not from that particular country from there, and they will try to take benefit of that FTA. So, the whole idea is in the broad manner of things, apart from the initial euphoria, it basically boils down to the nuances to which the FTA has been covered first. Second, the reflexivity which the regime is willing to show in order to recalibrate, remodulate the nuances of the FTA in order to ensure that the interest of Indian businesses is protected while balancing the interest of the counterpart businesses as well. And third, that to what extent our players, our different sectors, maybe textile, maybe manufacturing, they are able to take benefit from the FTAs. Because with FTAs, yes, there is a reduction in tariff, and even non-tariff barriers are also addressed quite a few times in FTAs. But then production standards, they cannot be done away with. For example, Ameya bhai was very right in pointing out that, for example, that coolant topic which we are discussing, if western world is has moved away completely from that category of product because of any environmental, social, or other problem related, we cannot expect that, but just because we have FTA, that then that benefit will accrue to us on that product also. We need to move our production facility, our capacity to those standards as well. So that is what I at least make out of it.
all right, Ravi. So, Amit, you also have your hand raised. Yeah, over to you.
Hey, thank you. I know AWS is actually planned for $4.4 billion worth of investment in data center in India. Any thoughts process on that?
Ravi. So, Amit, I kind of missed your question. So, can you come again, please?
See, Amazon is planning to invest around $4.4 billion worth of money on data center in India, in Hyderabad especially. So just wanted to know on thought process on that, and where in any it would impact on other you know in our perspective. What I want to understand, like if their investment in India would help us, or it would just be isolated impact on AWS cloud services or data center within India.
So, Ameya, I guess, yeah, Ravi, you
Yeah,
can,
so
Ameya.
Yeah, Ameya
see,
sir is
to
better
be very
placed.
honest, see, there is enough demand in terms of the capacity, and pardon me. So there are proxy companies that will in fact benefit out of this. Like I said, data center is only a tip of an iceberg. There is a whole different proxies that actually go behind it. You have power companies, you have cooling companies, you have HVAC systems, you have power cabling and networking companies, you have electromechanical companies, you have backup generators companies, substations, transformers, and there's tons of n minus one themes that can be played out, right? So honestly, it's good for the entire ecosystem that Amazon is coming up in here. I know some of our domestic players who are building their own capacities. If you look at Techno, for that matter, who is building tier three plus data center, they're not anywhere close to the operations, but hopefully sometime they should. So that will give us a kind of a good benchmark in terms of how Indian companies are shaping up. Honestly, it's very good for the entire ecosystem because the external companies also would want to invest. India also, I don't think so. I mean, this is the area which I don't have enough understanding on. But I think India has only the data privacy laws, or so to say, the data residency laws, but we do not have data sovereignty laws, right? So because of that, also a lot of companies are deploying their own infrastructure. Also, you have to understand one thing very clearly, Prince here. India is a very populous country. There are so many people using mobile phone. The culmination of this whole entire thing of AI, generative AI, or AGI, or whatever it is that we are talking about, it's going to happen towards the edge of the entire scheme of things. That means closer to the user, right? So that means more and more companies would want to invest closer where the users are. And India is probably one of the biggest markets after US for any of the industries. So if you see the consumer trends that we generate, the digital footprint that we generate, we discussed about this, I think, yesterday or a couple of days ago when we were talking about the data center, right? With Sri, I believe, correct. So my only point to conclude this argument so that you can move on forward is this is very good for the ecosystem. It's not going to impact our domestic players as such. I don't think so. Sorry, I have to mute now. But we can always do like I said, Prince, we can always do a dedicated space on this topic so that varied themes can be discussed. Here, I think you are discussing multiple stocks, so let's move on.
Right, Amir. Yeah, Ravi.
So, like, yeah, very aptly pointed by Amir sir. And, like, that is what I wanted to say. Like, again, Amir sir knows the specificities and the technical aspects, so he was able to drill it down very properly. So, any business, like, cannot, and its associated investment cannot be in isolation. If you reverse engineer that idea, you will see that there are a huge array of proxies, huge array of, part suppliers and others who will be involved and benefited from that business. In economics, there is something called multiplier effect, and investment has, like, the best multiplier effect. So, like, I mean, I wanted to address it to the the listener who asked this question, that an investment can never ever be in isolation, and for a tech and a capital starved, I would say, country like India, any investment is a welcome investment, give barring the fact that it qualifies, very other aspects like national security and stuff like that.
Thank you.
Thanks, Amit. So let me see if there are any more questions in the comments. Otherwise, we can. And definitely, Amaya will definitely ask you for a time for a dedicated session, as you pointed out last time also. So we'll keep that discussion for some other day for sure. I think Ravi and others, I think more or less we are done for the day. All the questions in our capacity had been discussed. So I think hope this added some value to our attendees. And let me, before we close, so these ideas are purely educational. So it is fair to assume that the ideas being shared by anyone in personal capacity, so their views are biased because they are presenting that idea. So you have to keep that in
And
mind. Yeah.
Prince, just one thing I would again want to re-emphasize, that kindly go through, the closing remarks by Shyam Sekhar sir in this event. In fact, should I read it, Prince, for the benefit of the wider audience ones? Because, like whatever idea you wanna play, you can play, because there is no one way to, success in, investing. There can be a lot of different ways, but the thing is that one common element which underlines all approaches is that you should have conviction and proper understanding. If you are trying to chase particular, fanciful idea or sector which is in conversation or running, so-called running at that point of time, you won't be able to achieve the real potential of your investments.
Right, Ravi, fairly said, and that should also be kept in mind. And the other day also we were discussing that whenever some idea is discussed in public forum, and especially in events which has wide acceptability, so we see some kind of demand for those companies. So in our personal capacity, we believe that there is no harm in taking the ideas for study purposes, but simply going by the names is not a wise strategy. You can surely study those ideas and the points shared by the presenters, and basis that you can build your own conviction after your due diligence. And if that matches your process or your framework, or maybe after discussing with your financial advisor, so in such cases you can go for investing. Otherwise, directly investing on somebody else's idea might not sail through well in totality. So Ravi, we got Ankit Kanodia bhai also. So let's see if he's available. So he must have come seeing the title TIA 2020, because he was one of the presenters. So would love to hear his thoughts as well. So Ankit bhai, if you are hearing us and if you are free for few minutes, would love to hear you out. And attendees, those are regular and already subscribed, they can ignore this. Meanwhile, let me ask you, those who are joining for the first time, they can surely subscribe to the YouTube channel Accidental Investor Prince, where I upload all the sessions. So yeah, that's so not sure Ankit is free or not. We'll wait for a few more seconds, otherwise we'll close for the day. And
Prince, I had request too.
yeah,
Like, am I
please.
like wanted to discuss on data center? I wanted to discuss, like, if you could actually, make up a space on fintech and banking sector, and the way we are moving towards, and the total overall our accounting and settlement, how it is impacting the way we are going in future. And that if you could actually set up some space,
Yeah,
that would
yeah,
be
I
great.
mean, surely, I'll set up a space. Maya himself pointed out that he'll love to do a dedicated spaces. So, hi Ankit bhai, how are you? Long time.
Hi, Prince Bhai. Am I audible?
Yes, yes, loud and clear.
Okay, so I didn't join to speak. I was more interested in listening. So I don't know
So,
what I can say right
so
now.
Ankit, what we did is last Sunday also we picked few ideas which you guys presented at TIA, and the remaining ideas we discussed today, obviously from the educational standpoint, and there was some note shared by somebody around that event. So we were discussing the pointers, be it thesis, pointers, triggers, or antithesis and risk. So we holistically discussed those ideas. So you also presented one of the ideas. So I thought we should bring you on. So broadly, obviously, speaking about particular name might not be a wise idea on your front, you being registered and all. We totally understand that. So Ankit, anything if you would like to speak about that event, how it was, and like what were the major takeaways for that event apart from the company names?
Yeah, so I think TIA is probably the best event to be in, not just in terms of the ideas you get. Of course, ideas is a big plus. You get one of the. I always used to admire TIA as a guest, as an attendee, and would always look up for the ideas, and more so for the networking which happens, because some of the best investors I met Jitin Bhai last year there. Unfortunately, this year I couldn't find him. Maybe he was not there. So there are so many. So this time I had a good discussion with Mr. Shyam Shekhar and Neeraj Marathe. So these kind of direct learning, direct discussion, and breaking the ice, and also building trust with some really good investors who have seen multiple cycles. You get to learn a lot, because I would still say that I have not seen so many cycles. So like 2008 crash, I was not in the market. So I still think our generation has not seen any big crash. I would not call COVID that kind of a market, because it was just a flash in the pan. Market fell down suddenly and then it went up. So I don't know how I will react when there will be a 2008 like crisis. And the way the market has gone up in the last 2 3 years, I'm not trying to be uh, someone who's projecting a crisis, but it disturbs me a little bit that how I will react. I think about myself only, how I will react if market say goes down 50%. If market goes down say 50% from here, some of the stocks which I've been holding may go down 60, 70, 80% also. So I'm still to figure out how I will react, how I will act. So those are the things. So TIA is a good. You talk to people who have seen these kind of multiple cycles, so you learn a lot. So overall, and I saw many ideas which were very good. I like the presentation of many people. I don't want to take one or two names, because then it would be a disservice to others who all worked hard, and almost all the ideas I really enjoyed and learned a lot from them. In fact, some of the ideas we are still working after looking at their presentation in TIA. So that's pretty much. I presented on car trade tech, and I being a SEBI registered investment advisor. Of course, I'm invested in the stock, and I've recommended it to my clients. So not a recommendation here, but I'm happy to take up any question related to that business, because since I've joined the call and you have asked me to share my view, I'm happy to share. Or if you have any doubts related to that business, I can uh, take up.
Thanks, Ankit. So, Ravi, do you have any question around car trade? If any, we can take. And Ankit, apart from that, as you rightly pointed out, all the ideas were great, and naming one in particular is a disservice to the presenter. That is very well taken. But again, Ankit, if I were to ask you, like, say, since you presented and you were part of TIA previously as well, but again, for layman or for people like us who were not part of the event, and the ideas came to us through social media, right? So what do you think is the right approach in I mean, how one should go about those ideas? Because what I've seen is people basis credibility of the presenter, right? Say if I have some inclination towards 2 3 presenters, and if they had presented that idea, so there are high chances I am inclined towards that investment or that company. So how to sail through such situation, and what would be your advice, like how one should go about these ideas? And in particular, if I ask you, like if you get 20 ideas from different presenters, so how you take that, and at what point in time you decide if those are investable or not?
Yeah, that's a very good question, Prince. So, first of all, when I started investing, I also fell for something like that, which is called, say, authority bias. When a great investor is when to whom I look up to, if he is presenting an idea, there is a high chance that I get attracted towards it. But I think that is a very, very, very wrong way of approaching investing. I think the first thing you should ask is, out of those 20 ideas, even though some great investors have presented, the first question you should ask yourself is that, do you understand the business which is being presented? Is it under your circle of competence, or whatever you call it? Can you understand the business? So for example, I'll just take one example. Don't take it like Ishmoit presented very well in terms of the company which he covered. But I am not very comfortable in terms of the industry. So I consider myself, my knowledge about that industry is a little weak. So I'll not look at that idea immediately. I'll go for the ideas which are much more simpler for me. Not because there is not money to be made in that idea. Maybe that idea can give very good returns. But if I don't understand the business, I probably keep that idea at the end. So I'll start with the ones which I understand best, and it is easier for me, or the way I invest. So if you are a newcomer, I would suggest identify companies. If you have seen 20 ideas, you can probably identify companies where you think that you understand the business. Business is easier to understand, even if you don't understand it fully. It is easier for you to spend some time and understand. Then go about, forget about valuation at the first time. First, try to understand the business. If it's a cyclical business, do you understand the cycle? In fact, in the long run, every business is cyclical. So, is the business has long cycles or short cycles? Is it deep cyclical business? Do foreign, so for example, a business like steel and all also depends a lot on the supply in terms of what is happening in China and other countries. So, do you have good grasp over that? These are the questions one should ask before jumping in to buy any stock. That's my advice.
Right, Ankit. So Ravi, before coming to Amit, Ravi, any question on trade, car trade? Sorry, yeah.
No, Prince Bhai. Ankit Bhai was very eloquent in his explanation that day also. So no questions.
Thanks. Yeah, Amit.
Yeah, yeah, Prince. Ankit actually, एक तार उन्होंने छेड़ा है. So based on that, I'm asking, Ankit, as you told, yes, 2008 crash, nobody has seen, and I think not much impact was there in India. But the concern what I have currently is if you take the majority of the CEOs in US and the largest stock which they hold in billions of dollars, they have sold out. Literally, they're proof. It's not like I'm making out of it actually. And if you look at even tier one bank like Wells Fargo, my account exists. My account even exists in Wells Fargo. I'm afraid of my dollars. What will happen there? What will situation? The current I mean, what do you expect with this bank runs which are happening and collapse, and majority of the community banks within United States are getting merged into the tier one banks. For example, New York Commercial Bank, which took over Signature Bank, now that's collapsed. And where do you see where it is leading to overall? This particularly with derivative markets, do they have real liquidity or not? And what is the overall impact in India, or do we see any uh, impact or no impact this time? Because it is what collapsed, banks have collapsed. It is more than what 2008 actually what has happened. And exactly what is it is rotating, as you told, cycle. If somebody understands, if we can go back to the Chinese calendar, and those based on that, exactly the cycles have played in the same way from 1930 to till date. The cycle, when if you see how they have pumped and how they have dumped, and the overall market impact on that, if you're on your thoughts. Thank you.
Yeah. So, Amit, first of all, I would like to correct, even though I was not in the 2008 crisis, I think India was also affected big time. There was a widespread, market-wide phenomenon where I think small cap index went down about 80% from its top. And portfolio-wide, we had a lot of carnage, and many investors left in stock market only to come back after 2014. So it was very tough time for Indian markets as well, and many of the real estate, construction, and infra companies which were trading at high valuations, they suffered very poorly, and many of the investors, specifically retail investors, were holding those kind of stocks. So I don't think that there was no carnage in Indian market. I think it was a very, very, very tough period. Having said that, I don't think I'm an expert in macro, so probably I'll disappoint you. I don't follow macro too much, so maybe others can take that question. I have no view on macro. All I know is that so we follow this principle of don't predict, prepare, where if the market has been benign for the last 3 years, my expectations from the market is very, very, very low over the next 6 to 18 months. If the market continues to do well, that's okay. I don't take cash calls. I'm always fully invested, so I may get a drawdown in my portfolio. So I I keep thinking from that perspective. I don't look at macro and I don't take cash calls. So I probably I'm going to disappoint you on this question. So I don't have any direct question answer to that.
Thanks, Ankit. So Ravi,
Okay.
you wanna take that question?
Hmm. So, again, macros are a very huge envelope to cover. But what personally I feel like two things, and again, these are very limited opinions, and these are my personal opinions. First of all, Wells Fargo, I mean, it's not a good bank. If you have an account there, you might be knowing that 2, 3 years back they were penalized for, artificially, automatically opening secondary accounts of their existing account holders so that they can collect account opening fees. So you just do not want to keep your money with that kind of crowd. There are other options in US market. You can definitely have a look at them. Second, the bigger banks in US are very well liquidated, like JP Morgan Chase. If you look at them, even for that matter, in terms of ratios and all, Wells Fargo is also very well liquidated. So that's not an issue. But the problem is that if the interest rate cycle, which is expected to, plateau, or people, lot many experts are expecting an interest rate cut very soon in the offing. If that doesn't happen, we will definitely see couple of more small regional banks in US folding up. The India on that part of things is relatively insulated because our regulator knows the cultural economy aspect of Indian economy, and as a result of which they are way more proactive in keeping all the participants in line. And by participants I mean banks, whether it be full scale scheduled commercial banks, regional banks, cooperative banks, or like even payment banks and all. So that's not the case. But yeah, if that kind of scenario happens, so if you see the entire TIA list, including Ankit sir's idea, all these ideas are relatively inward looking. Okay, in fact, the market's performance in 2023, if you look at very properly, the stocks have run up on case to case basis, and the trigger for that run up is largely the capex, or the expected capex, or like consumption theme, or like aspiration theme. Again, all these aspects are related to within the territory of India. So even for investment purpose sake, if we see the overall growth or traction is more focused upon the internal consumption and capex story. As far as the export part of things goes, because of n number of different geopolitical events, like right from Russia-Ukraine war, which has been raging for 2 years now, we are witnessing the pinch of inflation because of that. Then the Red Sea issue, which has literally made shipping costs go at least up by 30%. This is what I read like a week back. So I'm not giving you yesterday's data. So like there are lot many variable which are playing on. Then on the other end of the spectrum, you know that there are impending US elections, and obviously the incumbent wouldn't want to go into the elections with like higher interest rate. They would definitely want to cut down the interest rate, but at the same time it will be really interesting to see that do they actually have the headroom to cut the interest rate, because the recent inflation data as posted by US was not very encouraging in the direction for rate cuts. So it's an evolving situation, and again, Ankit Bhai very succinctly pointed out that we should know that who we are. Are we a macroeconomic expert, or we are a tech enthusiast, or we are an investor, or we are an entrepreneur? Because only when you know that what is your objective is, then only your perspective will be clear to you. So that's what I wanted to add on to this one.
Thanks, Ravi. So, my next question to Ankit and Ravi would be like, obviously, we have been talking, and last 3 months, 3 years or so has been very benevolent for the market participants. So, if going forward, there would be some tough time for, say, for the small caps or the mid caps. So, going forward, how individual placement on incremental cash should be. So, shall we stuck to bottoms approach of pick I mean, picking specific companies across different sectors, or it would be a wise decision to go with certain large caps, which can provide you some comfort that the lower side or maybe the margin of safety is in place, or this is not a right way to go about it. We go with Ankit first.
Yeah, so I generally don't have this kind of a blanket rule of large cap, small cap, and micro cap or mid cap. So generally, my portfolio is spread across small, mid, and large. So by and large, small and mid has a larger proportion compared to large cap. But I would agree with you that probably small cap and mid cap may disappoint for some time. But the market breadth is so large, even though as a as an index they may not do well, but there could be bottom up opportunities. Of course, it is very difficult to find these days. We are finding very difficulty in finding new ideas, but still, you can still look for ideas. And I would not try to guess that this is the time to go for large cap, because I find it very difficult to time that wise that this time is good for large cap, this time it's good for. I look for ideas. That idea can be a large cap or can be a mid cap or a small cap, and I just based on that I if I like the business, if the valuation comfort is there, I'll invest. It doesn't matter whether it is a large cap, even if small cap falls, that's part and parcel of the game. But if a small cap is good looking attractive from a valuation point of view, of course, uh, my strategy may not work with everyone. So that's what I have to say.
Right, Ankit. So, Ravi, you have any thoughts around on the incremental cash investment going forward? Okay, we also
तो
got Ankit.
प्रिंस, क्योंकि क्या है, ऐसा है ना कि तीन चीजें हैं। व्हेन जब भी आप अंडर वैल्यूएशन एक्सप्लोर करना चाहते हो या उसको प्ले करना चाहते हो, इट विल बी स्टॉक स्पेसिफिक। यू विल हैव टू लुक एट द स्पेसिफिक स्टॉक, वेदर इट इज अंडर वैल्यूड, नेग्लेक्टेड, और उसके लाइक लॉन्ग रन जो पीरियड उसका मीडियन मीन है, पी है उससे कितना नीचे है वो। एंड देन अगेन दीज आर नंबर्स, उसके पीछे जो नैरेटिव है, जो रीजन है, वो भी समझना रहता है। द सेकेंड वन इज थीम। इफ यू वांट टू प्ले अ थीम, जैसे फॉर एग्जांपल इन इंडिया इफ यू सी द केपेक्स थीम विच इज गोइंग ऑन, ओके, बी इट लाइक पब्लिक फंडेड और प्राइवेट प्लेयर्स जो है, लाइक केपेक्स इन इट सेल्फ इज अ थीम, एंड उसमें आप ईपीसी प्लेयर्स पे आ जाते हो, तो वो हो गया टॉप डाउन। So again, there is no need of this dichotomy ki how to approach in a world when we can have both. Why would we restrict ourselves to one only? And last but not the least is, perspective and duration. What are you looking for, and what is your time duration? That is also very important. If you are looking for some quick buck, then these both these approach may or may not suffice your call. But if your duration, your perspective is more focused on the overall growth, the India story, then it may be so that your the way you are looking at things changes, your time horizon changes. So that's what I look at, how I look at things. Because even for incremental cash deployment, if you see, just small tinkers are there. Just go and focus on, there is something called, many people use that relative strength index. Just उसको रिवर्स कर दो, देखो कि बुल मार्केट में वो कौन से सेक्टर्स हैं जो ट्रैक्शन ले ही नहीं रहे हैं, ओके, या फिर कंपनियां जो कि अभी भी अपने 52 वीक के पास लैंग्विश कर रही हैं, एंड समझो कि क्यों लैंग्विश कर रही हैं, पहला। दूसरा क्या है कि अगेन थीमेटिक्स का, तो देन सी इवन टुडे द गवर्नमेंट ऑफ इंडिया डायरेक्टली इनडायरेक्टली इन्फ्लुएंसेस अराउंड 28% ऑफ द इकोनॉमी, इफ आई एम नॉट मिस्टेकन। Like any push from that level will have a very strong cascading effect. For example, let us talk about defense manufacturing, let us talk about capex, EPC player वगैरह, then renewables वगैरह। इन सब का जो source point है is basically public policy push in India. So you can drill from there कि अब ठीक है, ये तो पता चल गया, अब इसके नीचे और क्या देख सकते हैं, तो that is top down approach. And last but not the least, that that perspective and time horizon for consistent compounders, like FMCG companies are there, they haven't moved anywhere in past 2 3 years. But as I pointed out in one of the previous discussions, that चाइना वाइना छोड़ दो, एटलीस्ट इंडिया पर कैपिटा कंजम्पशन में फिलीपींस से तो ऊपर आएगा ना. और जब भी फिलीपींस से ऊपर आएगा तो लोग कंज्यूम तो करेंगे ना भाई. तो ऑल योर एच यू एल्स, नेस्लेज और अदर पूरा गैमट है. सो अगेन दैट इज वाई पर्सपेक्टिव मैटर्स, हाउ यू आर लुकिंग एट थिंग्स. And last but not the least, as it is very famously said that in equity investing, there are no disagreements, but different durations perspective with which, two different people are looking at the same thing. That's what I wanted to add.
Thanks, Ravi. So, Jiten sir, welcome.
Thanks. I'll try to take just a
Yeah,
couple of
yeah, sir.
questions since
So
I'm traveling.
day before yesterday, there was news for sugar mills allowed to sell potash to fertilizer companies. So, how you see this development, and is it any new thing, or it used to happen in the past also?
So I'll not be able to comment on that to be honest because I've been traveling for the last 2 days. So I have actually not looked at the market soon and the
Oh,
news
okay, sir.
precisely.
And on there is like the unsecured loans has reached 35 of the bank portfolio in the year 2023. And if we compare this from the time of 2007, it is like 25% at that time. So any comments around that, sir?
I would not worry too much. I think things are very different now. Uh, See, you also have to see the quantum. 35% is it in numbers or is it in value? So that is very important to consider. Unsecured loans are not very large in size, and I think risk is managed much better in many banks. So I don't think it is too much of a worry, especially with ways things are we can there's a fear of civil score and people actually really don't want to default unless they have no option. If they have option, they will not. What I am seeing on the ground. So I don't think I'm worried about that too much.
All right, so thank you. Let me see if there are any questions in the comments. I'll read it out. Otherwise, uh, so one another question to my mind is like I was reading. So the solar capacity additions had declined by 44% last year. I'm talking about 2023. So that was owing to certain government regulations and all. So it is expected that I mean, is it fair to assume that since the government is also keen on increasing the solar capacity, so this year the capacity will increase big time, and certainly this is one pocket where one can have some I mean, obviously do their due diligence in. Sir, you are on mute.
Sorry. So yeah, renewables I think will do well, and solar in that will obviously do very well. The new policy of which the government has announced, I think there is tremendous work going on that, and they really want to make it a reality. I do know people working on that, and I think they are taking it very very seriously. It can be big. I think the sector which definitely should be on the radar. How you will be different. I mean, I will always look at doing it to be auxiliary.
Thank you, sir. So I guess I had asked all the questions. So Amit, you can quickly unmute and say what you have to say.
Thank you, Prince. Prince, actually, one question which I have in my mind, I think Ravi can answer me. Ravi, what is my question is like basically I'm in crypto, right? Let me give one scenario. What happens? The BTC pumps, money goes to the next. Once it goes to the once high, it goes to the altcoins. In the same way, does in the stock market does the money flows in the large cap capital, large cap stocks, and then once they take profit, it does it moves to the mid and does it happens in the same way? That's my question.
Mm. So, like, there is something called sector rotation, and yeah, I mean, it's quite possible, like what you are pointing out at, because hot money, always chases like maximum returns in least possible amount of time, especially given all the algo trades and all which we keep seeing. Uh, I think that that can be a case which you are pointing out at, but I'm no expert or I do not have that authority to say in a definitive manner that this is what happens.
Right, Ravi. So, Ravi, I think more or less we discussed and everybody contributed. Ravi, Mia, Jiten sir, and good set of questions by Amit and some inputs also. So, thanks everyone for taking out time on Sunday evening, and I'll be uploading the recording as soon as possible. So, uh, you guys can surely connect to the YouTube channel if you have joined late. So definitely you can revisit the session at any point in time, and that also provides some appreciation. We also feel like that the work has been appreciated by the people who join us. So definitely our way of reciprocating from your side that the good work is getting acknowledged. So with that note, I thank all the speakers and all the audience for taking out time today. Thank you so much, and we believe we continue to add value to everyone around. And thanks, Ravi, for taking out time and discussing those ideas supported by what you think by them in particular. And again, in our capacity, we tried our best to disclose wherever we had the position. So, just in case we missed anything, you can fairly assume that if somebody is just discussing something, so he or she may have some vested interest. So, with that note, we there is always one side to it. So it is always safe than sorry. So it is fair to assume that you limit this discussion to educational front only. And on the top of that, we are not SEBI registered. So by no means we can advise anyone. So again, those who are joining us regularly, they know it very well that all our sessions are purely educational, and we try to create a conducive atmosphere wherein the virtuous cycle, the speaker, the host, and the audience benefit from the discussion. And market is all about learning and be a participant because time is your friend. And as we progress, we should not be repeating the mistakes, early mistakes, and we should keep on learning. Sarvi, anything to conclude on your part?
No, Prince Bhai, you have promptly and in a second manner summarized whatever we have discussed and whatever we want to convey. Uh, that's it. Stay healthy, stay invested, and be bullish.
Right. And also, guys, you guys can surely follow Ravikant so that we can push him more to join us for these discussions as he frequently try to join us as and when time demands. So that is again one way of pushing our speakers to if more people are connected. So it is basically we can put an onus on them so that they can come often and share their idea best in their capacity with positive intent. So with that note, I take everybody's leave and I sincerely request you if you are ready to subscribe to that YouTube channel, I would sincerely request you to follow because it takes a lot of effort in conducting these sessions. A lot of preparation goes on that, and even on weekends, we have to spare some time from the family time. So you can assume it is also your responsibility so as to help us grow and the good things should reach more people because there has to be some incentive on everybody's part. So I request like if you are benefiting, so definitely you should spread a word if there is any feedback, positive, negative. So we'll happy to take those. My email ID is also mentioned, and even DMs are open for everybody. and most of the time people come up with a guest suggestion. We try our best to reach out those guests so that we can have session. And also we have been trying consistently to bring expert from different sectors so that the nuances of that sector gets clear to everybody. So yeah, with that note, I take everybody's leave, and definitely data center, defense, logistics are few pockets wherein on power and energy is also one wherein we will try to have sessions going forward. For those, you should stay tuned, and you can connect to my Twitter also, and also to the YouTube channel. Thank you so much.